Just give us your take as to what this year was like for you.
You know, it was a crazy year, obviously, because of fighting COVID, but these stellar returns. I mean, 25% returns in the broad market are driven by the Fed. And am I surprised the S&P outperformed? In a way, no. I mean, most of the big NASDAQ stocks are now in the S&P. And you actually, if you look at small cap value of all things, growth beat value across the board, large beat small. But small cap value did okay, and that's not in the NASDAQ. So I think that's why that part of that performed okay. What I am surprised about in the last year is how the USA stood out and apart from the rest of the world. You had developed markets really being only up about 10%. Japan was actually negative on the year, and emerging markets were negative on the year. So for a diversified investor, it's going to be a tough year to make a big return.
So the question is, Chris, where do you go for yield in 2022?
You know, Tim, it's going to be a challenging year. I think that, you know, if you back up and look at the S&P over a very long time period and look at those annual returns, you normally see the market have a recession every couple of years. Now, I'm not predicting 2022. The Fed is still accommodative, but as we've all talked about, they're backing off that accommodation. So historically, what I would expect out of this is a very low single-digit year, a volatile year with some up and some down, but you're not going to see a repeat, I don't think, of 2020 or 2021.
Chris, the state of California has been a leader when it comes to environmental efforts, climate change in particular. One of the ways to play that, especially in 2020, has been these massive flows into ESG funds, largely driven by flows into big cap tech in particular. Can you kind of show us the marriage between the two, the ESG space and perhaps the big tech space?
You know, Krita, it's really going to be about innovation and change. And I think you're going to see more and more money focused not just on ESG in general, but specifically on climate change. I mean, good Lord, just this week, the horrible news about fires in Boulder, Colorado being put out by snow. I mean, it's just crazy, the weather changes that we're going to see. And weather will, again, be the headline in 2022. But it's going to be the innovations. And I think continuing to push the change in energy sources and the way we generate electricity, power, and that's going to really bring some alpha opportunities that big tech is definitely trying to get out ahead of and solve. And I think that's going to, it may not show up as hard alpha in 2022, but it's going to be a long-term play for the next decade.
All right, well, let's talk a little bit more about alpha, specifically your alpha, Chris, and your team over there at CalSTRS. How did things shape up for you?
You know, when I look back at 21, I won't know the hard return for a while because about a third of our portfolio is in privates remains. So real estate, private equity, that takes a while to price. But I really do believe we're going to have about a 15% return in 2021. That will be about average, I would think, relative to other funds. If pension plans had more home country bias than the USA, then people will have done well. If you're more globally diversified, then you'd actually be lagging behind. You know, fixed income posted a negative 4%. I think the long bond was up about 50 basis points over the year. So fixed income is going to be a hard place. It's a hard time to diversify. And real estate, I don't know how you price a building. Economically, we're getting lease payments, but it's vacant. There's nobody occupying it. So, and malls, I don't even know how you price malls. So we'll see where real estate goes. Private equity is going to go up with the markets.
Hey, Chris, I want you to weigh in on the situation at Exxon right now and whether you're satisfied with the company's progress since the election of new board members following that proxy fight from engine number one earlier this year.
Tim, great question. And no, I'm not. I'm not satisfied with the way they've integrated our board members. They have not embraced them holistically and recognized that this is shareholders talking to them and wanting a change. Hopefully they'll put them all back up for re-election and we'll continue the dialogue. But I have to say, you know, between you and me, I think management has been a bit stubborn and they need to be more open. And if we need to raise our voice again on ExxonMobil, we will, because change has to happen. Change is going to happen around the world. And if these companies want to survive and not be Eastman Kodak, not want to be Blockbuster Video, darn it, they better get their act together and become energy companies, not just oil and gas firms.